Now, the last step to being able to make $500+ a week with just $10,000 is that you're going to have to know how to take the trade off. Right? Are you going to use a stop limit order? And if you are, you're still going to have to know how to come back to basically adjusting step 3. But if you're going to use a stop limit order, are you going to use it on the short legs only? Are you going to use it on the put side and the call side separately? Are you going to use it on the entire iron condor? And if you're not going to use a stop limit order, what's going to be your risk levels? What's going to be your uncle point? What's going to be your adjusting point? So if you don't understand what I'm talking about, then you have some learning to do before you can make this type of capital on a weekly basis. If you don't understand what I just said, you have some learning to do. And if you do understand what I just said, you should be able to adjust at a high level. Then if you can't, then you have some learning to do as well. In this video, we're going to be discussing how to make $500+ per week with only a $10,000 account. Let me repeat that, with only a $10,000 account. So that's making 5% per week. We're going to discuss this process using the 1 DTE strategy. DTE means days to expiration. So you're going to put on an option strategy with 1 day to expiration. You're going to do this 5 days a week, and you're going to average $100. So that's going to make the $500, and that'll give you 5% on your $10,000 account. So if you wanted to test this process, you can put aside $10,000 into a TastyTrade account for example purposes. Right? So TastyTrade, the founders of TastyTrade were the founders of Thinkorswim. So if you have heard of Thinkorswim, also known as Toss, and you like that platform, TastyTrade, the founders of TastyTrade founded Thinkorswim before they were purchased by TD Ameritrade. TastyTrade is the platform we like to use most of the time at the Dorian Trader to demonstrate trades, and we think it's super easy, and it's so much more advanced based on navigating the platform than Toss. It's a lot more contemporary. But this video is not about a platform comparison. But if you took that $10,000 and you put it into TastyTrade, for example, and you learned this strategy, this 1 DTE strategy that we talk about so often at the Dorian Trader, you can see a number of different videos on the process, right? From almost step 1 to the last step. And if you decide to join our trading group, then this is a trade we do almost every single day, a 1 DTE trade. It's a powerful money-making type of trade, but it's some steps that you have to understand about it, some nuances that you have to understand about the 1 DTE trade, things like risk that's associated with it, and things like how you should be able to adjust and when do you take profits, all the different things that is important to be able to be successful day after day after day. Now, we would be disingenuous to say that you're not going to have losing days, but overall, through the process that we're going to talk about in this video, you can learn how to make $500+ a week, or 5% or more per week, trading the 1 DTE strategy with just a $10,000 account. But you have to learn the process. You can't just put $10,000 into TastyTrade and then just start pushing buttons. It doesn't work that way. Nothing's that easy. Nothing's that simple. So what we're going to do in this video is we're going to talk about the steps. And the first step we're going to talk about out of 4 steps, the first one we're going to talk about is the setup of the 1 DTE trade. Now, let me put some framework or some premise around this. This is based on a 1 DTE trade, but we're recording this video on a weekend, on a holiday weekend, so we don't have a exact 1 day to expiration example, but you can see many of them on other videos that we did. But the process is exactly the same as what we're going to point out. All right, so let's jump into step 1. Now, what we normally tell people is that you need to look at the VIX and do the rule of 16 on the VIX. You want to do the rule of 16 on the VIX. So you're going to take the 1309 and you're going to divide that by 16. That's going to give you a 1 day percentage move. That's going to equal 1.81% basically. Okay, so less than 1%, the market is expected to move in 1 day. So you can use this rule of 16, this VIX rule of 16 for 0 DT type of trades, that's day trades, or this 1 DTE strategy. You can't use it for anything else because this rule is based on a 1 day percentage move. It's not based on a 7 day or 30 day or 1 year. It's based on a 1 day percentage move. So we start off by getting that 1 day with percentage move. So this is under 1%, 0.81%. Then what we do is take the straddle price. Right? The straddle price is just a back of the envelope way to be able to determine the expected move. What is the market expecting the move to be at expiration within the time frame? So in this case, 1 DTE. What is the market expecting? So the TastyTrade platform is giving us the straddle price of just under 30. We're going to round it to 30, and then TastyTrade has a expected move that they have their own formula for, and this is, they just say 29. I'm rounding it up. Obviously, if I was going to round correctly, I'll be rounding to 28, but we're going to round it up to 29. So normally we take the bigger number of these two. So we're going to take the 30 that we rounded to 29.80, that we rounded up to 30, and then what we're going to do is double that, because an expected move happens 68% of the time, or one standard deviation of the time. So we want to double that. We want to have a 2 standard deviation scenario, or 2 standard deviation process of winning, or probability of winning. So if we doubled this, that would be $60 or 60 points. Okay? So what we're doing is we're going to take that 60 and we're going to add it to this last number, whatever it's trading at, and then we're going to subtract it. So we're going to do a plus and a minus 60 from that number to kind of give us a starting point of where we're going to put our strikes, our trade. So when we're doing a 1 DTE trade, we're doing an iron condor. So we're going to take the 60 points from the 45.15, and we don't care about the cents, and we're going to subtract 60 from it. So that's going to give us 44.55. So if we go down here and we look at the 44.55, that's going to be an 8 delta. So in this example, I'm going to do a 20-point wide spread. You can decide to do something wider, something tighter. But for me, I normally execute the 1 DT trade with a 20-point wide spread, right? So that's the put side. And then if we go over here to the call side and we take the 45.15 and we add 60 to it, that's going to take us to 45.75. And so we're going to put a 20-point wide spread here. So that right there is 125. 125, that's what we're receiving on one contract. Okay? On one contract, we're receiving this 125 here. And so if you were going to collect this every single day and you was able to keep $100 a day, that would give you your 5% on your $10,000. But you don't have to collect only $100 a day because you have a $10,000 account. You can do 2 contracts per day. Because what we teach at the Dorian Trader is that you want to allocate for these short-term type of trades, you want to allocate 5,000 per contract that you execute. So if you had a $10,000 account, then that means you can do 2 contracts per day. And in this example, you will only be using $2,000 per contract, per iron condor contract. So that would be $4,000 of your $10,000 that you would initiate the trade at. You would just use $4,000. So you would still have $6,000 to the side to be able to deal with issues that come up. We'll talk about that here in a second. But this is how you can do it on the TastyTrade platform. We'll put 2 contracts here. So this is collecting $250 before fees and commissions. So if you did this in 2 days, you collected $250 in 2 days. That's $500 in 2 days. You can take the next 3 days off. If you did this in 3 days, that would be the 500 plus the 250. That'd be $750 that you would have in 3 days. So you don't have to do this trade every single day to make $500 or more a week. You do not have to do the trade every day. But if you did, you can see how powerful this trade can be if you won every day, let's just say $200. Well, that would be $1,000 that you made in 1 week, or 10%. But we're not advocating that. Some weeks you might hit that. But we're saying that if you structure this trade, most weeks you can potentially hit that 5% and not even have to trade every single day. So step 2 of this process is that you want to collect at least $100 after fees and commissions for the 2 contracts that you do. So you can collect 50, and you can, for each contract, would each equal $100 after fees and commissions. But that, if you do it that way, you're going to have to trade every single day, Monday through Friday, and keep that $100. So the better way to do it is to collect at least $150 to to $200 per two contracts in this $10,000 example, or $100 per contract. That would give you 200. And then if you got out of the trade once you were up 50%, then you would still be able to get $100 that day. You make it easier on yourself. You don't have to stay in the trade for expiration. So at the Dorian Trader, we don't like to stay in trades to expiration. So this would be the process that we teach you, is to collect a little bit more, $200+, get out at 50%. But if you won more than that, then that's fine. That'll allow you to not have to trade the process every single day. You can skip days that you are uncomfortable with, like Fed announcement days. Now, step 3, once you go through step 1 of putting on a trade, understanding how to put on that trade, using the criteria similar to what we were talking about, and then step 2, making sure you collect enough. Step 3 is you're going to have to understand how to adjust, because you're going to have some times where the market moves more than what is expected. And that can happen overnight, because this is a 1DT trade. You're putting it on today, it expires tomorrow, so you're going to have some overnight risk. And things can happen overnight. You can have some big moves that were not calculated in. So that's why we start off with a 2 times expected move, or at least as close to 2 times expected move we can possibly go. But you're going to have to know how to adjust. You're going to have to know how to adjust within the same expiration periods, because if you put the trade on today, tomorrow is going to be a 0DTE trade. So that's when you're going to have the most gamma risk. Gamma risk is the rate of change of delta, or how fast your directional risk is changing. So you're going to have some skills to be able to do this trade. You can't expect to make $500+ a week and not have any skills just to be able to put something on, put a stop loss, and if the stop loss is hit, then you're out of the trade. No, it's not that easy. You're going to have to be able to put in the work to learn how to adjust. At the Dorian Trader, we teach people how to do roll ups, roll aways, and roll outs. You're going to need to know that at a expert level, or at least at a level that you're super comfortable with, so you can be able to navigate these markets successfully, because things are going to happen. Yes, you're going to have days, and a lot of days, that you're going to put the trade on the previous day, and then the next morning you're going to be out of the trade within 30 minutes with 50 to 70% profit on your trade. And that's going to happen, truthfully, the majority of the time. But for you to consistently be able to make $500 or more each week, you're going to have to learn how to adjust these trades at a super high level. And that's the most difficult thing for people to learn. But everyone can learn it if they have the desire, if they have the fortitude to be able to just put in the time, put in the homework, study, practice, go after it. Now, the last step to being able to make $500+ a week with just $10,000 is that you're going to have to know how to take the trade off. Right? Are you going to use a stop limit order? And if you are, you're still going to have to know how to come back to basically adjusting step 3. But if you're going to use a stop limit order, are you going to use it on the short legs only? Are you going to use it on the put side and the call side separately? Are you going to use it on the entire iron condor? And if you're not going to use a stop limit order, what's going to be your risk levels? What's going to be your uncle point? What's going to be your adjusting point? At the Dorian Trader, we teach how you can get out of these trades using a stop loss or having what we call risk zones. For me personally, I prefer having a risk zone. I feel like I'm an expert adjuster, so I like to have a risk zone, and then I adjust at that point. And then I have the ammunition, I have the capital that we have to decide, because we're only using 4,000 of the 6,000 to initiate this trade. So if I have to adjust, I can adjust the trade and use some of the additional capital if I need to. And once I use up that capital, I stop adding more risk and just adjust for a debit if I have to. So if you don't understand what I'm talking about, then you have some learning to do before you can make this type of capital on a weekly basis. If you don't understand what I just said, you have some learning to do. And if you do understand what I just said, you should be able to adjust at a high level. Then if you can't, then you have some learning to do as well. These trades can be super, super lucrative. You can make a ton of money doing these trades, but you have to know what you're doing. You have to understand how to put on the trade. Step 1. You have to be able to read the trade, understand what's going on with your trade. Make sure you put on the correct amount of risk so you can collect the correct dollar amount. That's step 2. Step 3, you're going to have to know how to adjust, which is the most difficult step. You're going to have to learn that. Then step 4, you're going to have to understand how to take off the trade and all the different facets of that. So we are really trying to grow our YouTube channel. So if you found value in this video and you're still watching it, then please subscribe to the channel if you haven't already. Please like the video and leave a comment. That would help us with the Google algorithms or the YouTube algorithms, and it'll help push our YouTube channel to more people and potentially be able to reach our goals of having at least 5,000 subscribers. So we thank you in advance for your support, and we look forward to seeing you in the next video. Bye for now.